probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house. How you doing, Dennis?
Hey, good morning, Mike. I just heard my alert go off saying, so something I've done just either filled for a win or a loss. I don't know which it was, but we shall see. Anyway, hey guys, welcome. Hey, have you ever found yourself making a trading decision that you instantly just regretted? You just went, oh my goodness, why did I do that? And oftentimes it's driven by market hype and noise, and so if you're in that boat, you're not alone. Mike and I have done that probably at least twice in our trading career, right, Mike?
I don't think that there's enough fingers and toes between the two of us to count up all the times that I've made those kind of mistakes.
Yeah, without a doubt, and that's one of the things we're going to do today is we're going to expose the most dangerous post-election, because it is election tomorrow, trading myths, so you can be smarter in your trading and be able to trade with more confidence. And so, as we said earlier, my co-host, Mike, just tell the people a little bit about yourself.
Yeah, thanks, Dennis. So my name is Mike Lamott. I've been trading for 25 years. I founded Mara Wealth, and I also wrote this book called The Trading Mind Wheel. And the reason why I wrote that book is because over the 25 years that I've been trading, I learned that there were certain common skills that we need to learn about in order to trade well. And I studied so many things throughout my trading history, and I had to get a little bit over here, a little bit over there. I thought, you know what? Let's put everything in one book where if you could just read this, then you'll at least know what you're getting yourself into before you go into this trading journey, and hopefully have an easier time at it than I did.
Yeah. And so, you talk about that, and that's one of the things that both of us do is we basically, we're not here to be gurus going, oh yeah, this is what we do and you should do the same thing. We're not saying that at all. What we're saying is that we're sharing what we've learned from our mistakes. And so I'm Dennis Wilborn, and welcome to the channel, everybody. I've been trading for over 30 years. I started out as a naval aviator flying jets off of aircraft carriers. And along the way, I struggled with my trading. And so about 15 years ago, I put together the AutoPilot trading system. And I wrote a cool book. It's called Trade Your Way to Freedom, Retire Early with Enough Money with No Fear. And I do the same thing that Mike does, is we basically want to get out there and share with people a clear and simple trading process that you can follow, and it doesn't take all your time. But enough about us. We want to be here for you. So I want to make sure that everybody stays tuned in to the end, because I am going to share a powerful, little known momentum indicator that it's uncanny on predicting momentum shifts. And so we'll get into that a little bit later. But with the presidential election, coming up tomorrow, this isn't about who's going to win or who's going to lose, but many traders are feeling the pressure. We've gathered some questions from some of the top traders, around the world about post-election myths and strategies, and these myths could be costing you more than you think, and also keeping you out of trades you should be trading. So, Mike, what about that concept of the major challenges people have in trading when they're faced with high volatility due to uncertainty and stress? So how much is this just plain fear? And I capitalize the fear, F-E-A-R, big time fear.
Well, sure. So you have a lot of money in the market, and let's say that you have some trades on. Let's say that maybe some trades you just put on recently, maybe some trades you've been sitting on, maybe you have a profit cushion on a few of them, and the market starts juking and jiving, right?
Yeah.
The volatility starts to pick up, and some days you're doing well, other days you start to see profits start to slip away. Some of the trades that you put on recently, maybe they start to move in your favor, and then they squat. Right?
Yeah.
Where maybe you were up yesterday, but today you're down a little bit and you're underwater, and then tomorrow is the big day, and maybe we get a result, maybe we don't, but you're sitting there wondering, well, what should I do with these trades? And I think that is a legitimate fear to have. I think that it's a legitimate fear to have, and I think that part of it comes from either one, uh, you uh, your plan hasn't accounted for these kinds of things
Mm.
because you're sitting there trying to think about, well, what should I do if this, if that, and yeah, it's almost like if you were to hop in the car and drive cross country. It sounds a lot like fun. It's a big adventure, but you don't really know what you're going to encounter along the way.
Yeah. Right on. Yeah.
And so it's kind of like that.
Yeah. So it's like, because a person doesn't have a plan that plans for contingencies,
Right.
because it's just not the pre-election thing. There's other big time, volatility, shape moving, momentum moving times in the market. There's things like earnings reports. You're waiting for an earnings report to come out, or a big
Sure.
announcement. Um, uh, and sometimes it's just news that, because the news, it reminded me of something I was reading earlier today, and it comes from Philippians 4:8, and it says, "Focus on what's true." And
Okay.
a lot of times, what comes out from the news organizations and even the companies themselves, it's just not true. They're trying to, if it goes, oh gosh, back to probably the tulip bust back in, a long time ago,
Hmm.
with
Yep.
that meltdown. But it probably goes back, and it's just that is just not true. And is that because people don't want to accept the truth, or is it that their belief system is is set up in such a way that they define their own truth, which may not be the truth? I know that sounds confusing, but you know what I'm talking about.
Yeah. Well, what if instead of looking for truth, well, what if we were looking for facts? Right? Like,
Okay.
what's actual fact? So price moved in such and such direction,
Right.
right? Like, so that's fact, and it's you know neither good nor bad. It's just, well, what happened. To
Okay.
me, that's an objective truth. Somebody else might be looking for the truth behind the move, right? And trying to come up
Okay.
with the sort of subjective truth of, oh, well, price moved in this way because earnings were good or bad, or missed expectations, or because such and such person got into office or didn't get into office.
Right. Okay.
And
That makes
so
sense.
perhaps there's a subjective truth behind it that they're trying to find.
So no, that makes a lot of darn. Whoops, what happened here? Some I've dropped something. Hold on. So yeah, that makes a lot of sense, from the aspect, objective versus subjective
Right.
truth. And so I kind of take a look at that from looking at looking at the charts. What I find is, looking at the charts, that's more of an objective truth than a subjective truth, because I don't have to know the why behind the move. All I know is that something happened there that that resulted in this move happening. So, hey,
Right. Absolutely.
let's go ahead and start answering some of these questions that folks had. And um, so let's break down the truths behind each one of these myths. And one of the big myths of people is, how can I prepare my portfolio for market volatility without making fear-based decision? We started to nibble on that a little bit. I know, and as we said, it's kind of like, um, I know that when we become fearful, our IQ actually drops. We go on beast mode, if you will, and we start acting with our animalistic type urges, and we
Mm.
don't necessarily make the best decisions in the world. And that applies to relations, that applies to a lot of other areas in life, but it in particular applies to trading stocks, because those decisions can just rip your face off and you lose your money. So what about that fear-based decisions?
All right. So let's assume that we're talking to somebody that doesn't have a plan. Then the
Okay.
first thing that I would ask them is to try to think through, well, what's the worst case scenario for your portfolio right now?
Right on. Okay.
Right. So, what's the worst case scenario if everything were to gap down? Like there's a major crash that
Right.
happens. Well, what would you stand to lose?
Mm.
And are you losing your profits? Are you losing your principal? What is it exactly would you stand to lose? And are you okay with that amount
Yeah. Yeah.
that you would stand to lose? Because if you start to think through some of those questions, then that's going to at least begin to give them a baseline
Okay.
for what they might be willing to tolerate, and to not just think about it as like some far off storybook, right? Like think about those things and try to actually feel what that would be like. Okay, here's my worst case scenario, and it happened.
Yeah.
Because
Exactly.
it's one thing to kind of think about these things as something far off, but when it's actually here, then that's when the rubber tends to meet the road. And am I really okay with, oh, sure, if this thing pulls in 20%, I'm fine with it. Okay, well, it happened.
Yeah. Yeah. Well, I think also in being planning for it, one, you have to have a trading plan. I know you've been big on trading plans. I'm big on trading plans, and I think one of the biggest things in the trading plan is there's a psychological or mindset preparation, but there's also some just simple mechanical things a person can be doing. And you know what? One of the major one is
Yeah, well,
put
what's that?
your stop loss in place rather
Oh,
than just
sure.
just thinking about it. And so, uh, and the other thing is, does your plan take you out of positions, or basically close positions as they start to weaken? If they start to
Mhm.
weaken and go against you, because right now the market is really wishy-washy, and with in preparation for the election, not knowing which way the election is going to go, and it is clearly even more unpredictable because of the volatility. And so right now, my exposure in the market is 20%. So as you say, prepare for the worst. I know that if I know where my stop losses are, so I might lose 1 to 2% more, out of my whole portfolio right now if everything goes against me. But then I'll be totally in cash, happy as a clam, because I'm ready for the next big move up. So, hey, what about risk management strategies? What risk management strategies work best during politically charged times?
Oh, and so I'll share what I do as
Okay.
far as my trade management goes, and it's basically running the same kind of plan almost all the time. And you might be like, well, why would you want to run the same plan all the time? Why wouldn't you want to adjust for this kind of market condition or that kind of market condition? The reason why is because this plan accounts for all that.
Mm,
And
okay.
I start to automatically get kicked out of trades when things become unfavorable. So if I'm in a good strong condition, I'll naturally end up being very heavily invested. And when things start to change, I'll start to get kicked out and I'll just be sitting and waiting. And that's kind of what's happened over the past 2 weeks. So
Yes.
two
Yes.
weeks ago, I was on margin. I was on margin by about maybe 125% invested
Right. Right.
2 weeks ago. Then uh, then I got down to about 50% invested. And then as of last week, by Friday, this past Friday, I was down to one position.
Okay. Yeah. Yeah.
And it's all just based off of rules, right? So
Yeah.
I'm not trying to sit here and be like, which stock do I think is going to be the one that goes up if so and so wins the election, or which one's going to have the best earnings? No, it's all rules based. And if I if I act as the referee instead of trying to be the forecaster or the fortune
Right.
teller, then it makes life a lot easier.
Yeah. Right on. Yeah. So no, I agree with that. And one of the things that you know, for in that aspect of we call it politically charged times, but it's anything that when we had the back in 2007 2008 when we had the housing debacle where the market went into a significant downturn and bear market, that just was the fear was just rampant and all that type of stuff. The I think teaching ourselves, learning to, when the market does start to fall apart, knowing that we have a both the patience and I wrote that down in my book the other day, having being prepared and being patient are
Mhm.
the two critical ingredients for that. So that way you're patient to wait long enough, because if you've waited just a few months, the problem is in our society today, we kind of have a very short attention span, and we kind of want it now. And so in the world of investing and trading, learning how to, and I hate to use this as a cliche, but that uh, delayed gratification can be achieved if one follows their rules. So how do and I don't know about you, but back in the day, I used to get all just spun up, and I would be stuck on an emotional roller coaster caused by the news. I'd hear a news story about a particular stock, and I go, "Oh, got to jump in there on that stock," and all that kind of stuff. Um, but how does one protect themselves against the emotional roller coaster caused by sensational news headlines dealing with elections, dealing with war, dealing with just about anything? How do we protect ourselves on that?
We have to stand guard at the gate of our minds, a-
Cool.
and
Yeah.
uh, and really decide what we're going to let in,
Okay.
regardless of we're going to be influenced by uh, our environment for better or worse.
Okay.
And so if we find ourselves constantly dialed into the news, constantly dialed into social media, or whatever it happens to be, we're
Yeah.
going to be influenced by that for better or worse. I'm not
Yeah.
saying that the news is bad. I'm not saying social media is bad. I'm saying that we're going to be influenced by it whether we like it or not. So if
Yeah.
we're inviting things in that might be causing us to have itchy fingers or make
Mm.
rash decisions in the market, then well, we've got to take a look at that and decide, well, how much of this do I want to consume? And I think that another thing that can help to combat whether or not it's going to influence a trading decision is to make a decision of when are you going to make trading decisions, because it
Oh, yeah.
sometimes, if you don't, well, like that might sound silly, but if you don't have a dedicated time for when you're going to start to make trading decisions, then it could just be any time. Maybe
Yeah.
it's a
Yeah.
time right after I saw that, this earnings report or this Fed meeting or this election result just influenced some of my trades. Let me go over here and see what I need to do to protect my portfolio. Or maybe there's something that's going to happen to drive a certain trade higher, and I'm being
Yeah.
if you have a decision of when are you going to act, then I think that helps to uh, make things a little clearer, make things a little simpler.
Yeah. I think for me at least, it's been basically limiting my news consumption. In other words, I'm very careful about what I take in. Oftentimes, I do not listen to the financial networks at all,
Hmm.
because I know through my experience, that they're trying to stimulate my emotions. And I know stimulated emotions leads to bad decisions. I focus on the data that's on the chart, and I practice, as you said, talked about it a little bit, but it's kind of an issue of mindfulness. I have my time set during the day where these are the times of days I'm allowed to trade, not anything outside of that. And boy, when I made that decision, and most of the times I do my trading after hours. Once I
Mm.
made my decision to do that, it took a lot of emotions and bad decision making off the table. Hey, let's get on. We have several more of these to jump through, and especially looking at the mindset pitfalls traders face, uh, and how to stay disciplined. So, just focusing on political outcomes distract from more important market fundamentals.
Well, yeah.
Okay.
Yeah, I think that there's that can. I think that there's a lot of things that can distract. Anything. So if our focus is supposed to be here,
Okay.
and there's something all over here on this side, or something over on that side that's distracting us from where we're going to go, then we're going to start to veer off.
Yeah.
We might not even veer off that much. We might just veer off this much or that much. But as you continue off, now you're you could be how many miles off, right? You're so as a from the perspective of being a pilot,
Yes.
how that little 1 degree or 2 degrees off,
Yeah.
how big of a difference can that make?
1 degree, and I won't give you an exact number, but if you're 1 degree off and you're flying from San Francisco to, let's say, New York, right? Well, if you're 1 degree off, and you'd wind up in North Carolina, by the time the flight was over. That's but you didn't hit your target. So really interesting, and I think a really great it's an analogy of this is they say that when you're driving your car or riding a motorcycle or riding a bicycle, that you basically tend to go where your eyes are focused. If you focus at the ditch, you're going to go into the ditch. If you focus on staying on the road or the center line of the road, you're going to stay there. And that's some of the things that they teach motorcycle riders, about how to get out of situations, is basically look to where you want to go. And I think for our traders out there, oftentimes with them is they haven't taken time to define where they want to go. And therefore it's not written into their routine. It's not written into their rules and all that kind of stuff. And so, yeah, and I agree with you wholeheartedly. And so, what about that past, the past historical data? How do we take that into account? Because I've basically said numerous times, and I've proven it and went back and researched it, that 87% of the time after a presidential election, the market rallies.
Right.
Now, so if I blindly follow that, I'll go, oh, well, then I need to be loading up on stocks right now, right? Because I know after tomorrow it's going to rally. But
Mm.
but part of the problem is do I really know that? Is that is that a proper signal to me making trading decisions on? What's your
Well,
thoughts on that?
I don't know if it's a proper signal or not, but just like how after winter comes spring, you know that that's going to happen, but you don't know the exact day. So
Yeah, exactly.
you could start to prepare. Well, when are you going to plant the seed?
Yeah. Mm,
So
yeah.
you know that after the election, that you typically get a bounce. We can start to observe the market and see, okay, in what way is price structure happening? Okay, it's starting to pull back in. We can identify important levels to watch and
Right.
then get ready for when the bounce comes. Not trying to predict when the bounce is going to come, but just be ready to act when it does come.
Exactly. Yeah. And it's probably where we're preparing ourselves to take action once we get our proper triggers and
Yeah.
put those in place. And so, hey, so should I completely be out of the market? This is the question somebody asked. So should I be completely out of the market during the election week, or are there strategic ways to stay invested?
Mm.
And while you're thinking about it, I'll share just really quickly on this. Is what I've done is like this week, as I was preparing for my trades for this week, what I did was I had several stocks and ETFs that were actually setting up and giving me triggers. Now, I know that it's a very volatile time during the election or during the election period. And this week, we have a double whammy in that the Fed meets on reports out on Thursday. So that's another contributor or element of volatility and confusion. Well, what I did to protect myself, as I said, I will trade these charts in front of me. If I get a trigger, I will get into a trade on these. However, what I'm going to do for protection is I'm going to reduce my position size dramatically down to a
Mm.
quarter size, right? And so if that way, because I think and I think that's part of the fear that goes into this, and fear that goes into this question is, well, if I don't do anything and I miss out, how am I going to feel? I'm going to feel really crummy and bad, and we've all been there. And so what I found is that when I have a little bit of doubt or not sure about where things are going, but I get the signal, I want to go ahead and jump on board just a little bit, and that way, if the trade takes off, at least I will be in it to participate in the rally, but I'll be protected to the downside. So that's one of the things that way I approach this, because I reduce the risk, and again, I'm watching those charts for my opportunities. So, what's your thoughts?
Yeah, I think that if you have to limit your downside, and it sounds like that's why what you're doing,
Yeah.
and that's so much of trading has to do with the reward to risk ratio. Well, when we think about it, I think that if we're able to risk $1 and make $2, then I think that that's a worthwhile trade. I think that we need to figure out what the odds are too. If price is pulling back and we find our trigger, and our trigger is a high probability,
Right.
and we take that probability and we take the other part of the math, layer on the reward to risk. That's the whole thing that's driving whether or not we should be in or be out. So, for example, let's take a look at, I don't know, like where I'm just pulling up SPY.
Okay.
SPY is sitting on the 50-day moving average.
Okay.
So that's a spot where it tends to be defended. It tends to um, where dip buyers will tend to show up. And so people might look at, oh, all right, maybe that's a spot where I take that little nibble
Yeah.
that you were talking at before, because that's a spot where if price does sink more, you could cut a loss very quickly. But if it
Right.
does rally, your risk was this much.
Yes. Yeah. Yeah.
And
So
I
you're
think that
pushing.
that's part of the name of the game.
Okay. Cool. So let's see. Let me go down here. Oh, this question is set up just for you, Mike. What
Oh, yeah?
what mindset practices can help me remain disciplined and stick to my trading plan even when everyone else is panicking?
Yeah, it's almost like that question earlier, well, with listening to the news and listening to it, other people are in our environment.
Hmm.
So, what's going to influence our trading decision? I think that that's part of what we need to figure out ahead of time, and that goes for coaches and mentors too. And in what way are we going to listen to them? There's been plenty of times and this is early on. Well, when I think back to when I first uh, discovered the New York City Investors Business Daily Meetup. And by the way, we're relaunching that group. We're having our first
Awesome.
meeting this Wednesday, which is fantastic. I can't wait. But when I first discovered that group, the very great people, very well intentioned. Uh, the problem that I would sometimes run into would be, okay, I've got my idea of what my plan is going to be, and here's somebody with a lot more experience than I, and they would tell me, oh, their thoughts. And sometimes what I was thinking would differ from what they're thinking. But because I had put their experience on a much higher pedestal than where I am, it's just like, all right, well, they know better than me. Toss my idea and go with what they're thinking.
Sure.
In some ways that's good, in some ways it's not. And the way that it's good is that I'm following experience and I'm learning. And the way that it's not is that I'm not the I'm not growing.
Mm,
Because I would just it would almost be like copying off of somebody else's paper without learning the lesson.
okay. So you're
Does that
saying,
make
are you
sense?
saying, so you're saying that we have to have in order to enhance the learning experience, we actually have to make our own mistakes. As
Well,
long
I
as,
think I think so.
yeah. And,
And we
and
need to be intentional about uh, are are we trying to learn or are we trying to make a quick buck?
okay.
For
Yeah.
a long time, I was trying to make a quick buck.
Mm,
When I eventually shifted my mindset to say, okay, I'm going to focus on the process,
yes.
that's
Yeah.
when things started to change. And that's when I was finally able to slowly improve my process to the point where now, like I know what works and I know what doesn't work. And it's not where I'm going to place this trade or that. And I know that, okay, if I place this trade right now in, I don't know, say Reddit,
Right.
that I know that this trade is going to work. It's not that, it's having all the different patterns that I trade,
Okay.
knowing what triggers the pattern and saying, okay, if I trade this pattern 100 times, I know that at the end of the 100, I'm going to walk away with more money in my pocket than I did when I first started. But I don't
Sure.
know which individual trade is going to be the one that works.
Okay. Yeah. Well, yeah, this part of the deal is, I think, understanding and coming to grips with some basic facts. And those, a couple of those basic facts is what understanding what we control. Okay. As traders, we can control how well we execute our routine. We can control how well we follow our rules. We can control when we enter and actually when we exit a trade, right? Can we agree on that? When we enter and when we exit. However, we cannot control anything that happens after we place the trade up until the time we exit the trade. Now, when I say control our exit, I either get out with my stop loss or I get out with my profit.
Mhm.
And that's what I mean by controlling the trade. And learning to accept that as a fact was very beneficial from a mindset perspective from me. And so, and if I happen to mess up now and mess up and enter a trade incorrectly,
Mhm.
well, typically it's going to result not provide the result that I wanted to happen, because my rules have been based on lots of crunching the numbers and doing the trades and simulating the trades for the back testing. So as you said, we know what works, and so that's awesome. So how do you differentiate between genuine market noise and genuine signals that warrant action?
So what do you mean by what do you mean by that, Dennis?
Well, it's like I shared earlier this morning. Focus on what's true. And I think the noise is, I think part of the thing is for me, I close my eyes if I'm hearing something, or I happen to get an alert on my phone about something, a stock that I'm looking at or owning, something's going on with it, is that um, if I get the alert, which I consider noise, I need to go and look at the chart, which is where the genuine signal would come from, thus requiring my action. Then the other things I have to
Okay.
Yeah, then the other things I have to check off the blocks. If I get that signal and it's, let's say, let's say it's 9 o'clock in the morning in California, which is still 4 hours or 4 hours before the market closes. I have to weigh it and say, okay, well, I only trade during the final hour of the day. So
Mm.
so my hands are tied. I'm not going to do anything until the final hour of the day. And that right there, that one little hack, if you will, has saved me so many bad decisions, because oftentimes the candle you see at the beginning of the day or midway through the day is not the candlestick, in other words, price action, that you will see at the end of the day when perhaps the sellers come in. So that's what I'm talking about with that one.
Oh yeah, sure. And I've made that kind of mistake too, and will often look at the end of the day to see, well, how does this price bar look then versus, say, in the middle of the day, because it is a very different story. I think that what it boils down to, if I can share uh, a little something here.
Where'd you go? No, I see you.
If I could share a little something here, I think that this is what we're working towards, right? So what we've got is this funnel right here, right? So we're basically trying to make a funnel where we could put whatever kind of inputs into this funnel, right?
Okay.
Whatever you want, you could put into the funnel.
Right.
And what we're all trying to work towards is what is going to get to the bottom over here. And hopefully at that bottom part, it's going to lead towards money.
Exactly. Yeah. Yeah.
So when we're trying to think through, well, what are we going to put into the funnel? That's the point where we're filtering out the noise, because we can put anything in here that we want.
Okay.
But we've got to make that decision of what gets in, because anything that there's stuff over here, there's stuff over here, there's this whole section on this side, there's this whole section on that side. That stuff doesn't make it into the funnel.
Right.
We decide what this point is. We decide what that point is.
So it's almost like I know I apply this to stock selection. Okay. Every week I wind up with about 90 stocks that come out that go into my funnel. Right.
Right. Exactly. Well, what about the other 10,000 stocks? They might be moving right now.
Well, I can worry about that, or I can just basically focus on what is in my funnel. Because if I'm out there worried about or afraid, is basically the fear issue, afraid I'm going to miss something that's not in my funnel,
Mm-hmm.
that's going to just wreck my trading. It reminded me of a psychologist that I helped, was coaching, and she came to me and said, "Dennis, I'm missing trades." And I go, "Well, one of the things, you're looking at too many stocks." And so, because she was looking at like 100 stocks per day, and so she would be so worn out and tired from looking at these stocks. And I said, "What you need to do, Kathy, is you need to, cut your watch your daily watch list down to 10 or 15.
Mm-hmm.
Well, I can't do that. I go, well, why not? And she goes, well, Dennis, this was what she said. She goes, well, Dennis, if I cut it down to 10 or 15, I'll miss the opportunity. And I go, Kathy, you're missing the opportunities now. Again, it gets back to the aspect of our false beliefs. So excellent. So I almost see sometimes, Mike, it's like a funnel into a funnel on a lot of these. Like you've got this, like you said, 10,000 stocks out here,
Mhm.
And IBD, Investor Business Daily, does a great job of helping us funnel down into just the strongest, fundamentally strong stocks. And then
Mhm.
I take that and I funnel that again down again into which ones have the best accumulation distribution, uh, you know, scores. And then once I come up with that 90, then I just run it through which is closer to my particular setup. And it's very simple, but it allows me to be looking at, probably, well, up to 5 stocks per week. And then I look at 8 leverage ETFs every week. And that's my universe. And
Right.
if it's outside my universe, I don't care. And because what's outside my universe is typically not going to make me money.
And so that sounds like something that would be pretty pretty simple, pretty straightforward, and pretty and not very stressful. Is
Oh
that
yeah. Yeah. It's not. It's not stressful at all.
yeah, no, no, and it shouldn't be. I think that overwhelm causes
Mm,
a lot of people to be very stressed.
yeah. I
Overwhelm causes me to be stressed. Well, when things are very noisy,
yeah.
then that stresses me out, and I can't think straight.
Well, I think, I'm gonna throw this out, part of it in the final question is it true that one political party wins always when parties win always leads to a better market performance? And what does the data really say? And the data really says that no, it really doesn't matter which party wins. Now, it will affect different sectors differently because one party favors, will be more favorable to certain sectors, and the other party will be less favorable to the same sectors. But the market itself tends to once the once once the uncertainty of who's going to be elected is over with, the market tends to go ahead and do its thing as it has done for hundreds of years now. But back to what was the question again?
Is it true that one political party's win always leads to better market performance?
Yeah, and I don't think so. There's no real clear correlation on that. So, but back on, you'd asked a question about signals, and the question prior to that I was going to answer. Um, but you talked about, getting down to just a few stock. If it's outside my universe of stocks and or ETFs, um, I don't have to worry about what's outside of that, and then it's just a matter
Mm,
of waiting. And like my mentor used to tell me when I would be impatient, he would say, "Dennis," he goes, "the best trade of the year comes around about every 2 weeks." And it basically is very, very true. I mean, it does. And so teaching oneself to be disciplined and all that kind of stuff is really critical. So those are the 10 questions, Mike. Did any of the questions kind of stick out to you?
well, I think that last one of differentiating between noise and true signals, that's the one that was able to help me. I think well with this trade in Reddit that I had a few weeks back
Right,
because
right.
that was a trade that I was initially shaken out of.
Mm,
I was in it, I was shaken out of it, and then it's set up again, and then because I'm following my process, said, "Okay, well, it's setting up again. I'm not going to not buy it back and not buy it back at a higher price because I was shaken out. I'm taking the setups that the market gives, and I bought it, and now it's up 70% in a month and change. But
how
by
much is it?
following a process, by having these kind of filters in place, that's what you allow yourself to be able to do.
Oh, yeah. And so, most of the big gains that I've ever gotten in my life just happen. Okay. They didn't just, well, I have no control over what's going to happen after I place the trade, right? But most of the big, winners that I've had was that I was just in the way when it went on its big run, and I
Mm.
had a piece of it. That's it, and nothing magic, nothing, nothing. I traded my system properly, and I think one of the best ones, that I loved was an option trade I did um, on Mastercard back about, it's been a while, it's been a long time ago, but it was a trade on Mastercard, and it was just one of those just perfectly timed trades, perfectly timed option trade. Took a long position, and it jumped up and took off prior to earnings, and it was just absolutely crazy, and made about $8,000 on that particular trade. And I'm going, okay, this is cool. Uh, but the cooler thing about it is it gave me enough funds to be able to help pay for my son Brandon, my son's wedding. It
Oh,
happened
that's
that
great.
same week. It happened the same week as that, and so it seems like a Trump win. Yeah, I don't know, guys. I think it's a toss up. Well, I don't know if it's a toss up or not. Just again, you
Mm.
can't depend on what the news
Yeah,
is out there. So,
keep
Mike,
getting out there, keep voting.
yes,
Yeah, don't take it for granted.
yeah, our pastor did a really great job yesterday of identifying the 10 qualities of somebody you should vote for for presidential, for any office, but also for presidential. So, hey, Mike, so election hype can seriously mess with your trading psychology. It amplifies fear, it amplifies FOMO, and makes sticking to your strategy a real challenge. And so, the key is to understand that emotional decision making rarely leads to a profit, and so, one of the things we want to urge everybody to stay grounded and trust your system. And if you don't have a trading system, you can check in with both Mike and I. I give my trading rules on one page away. And I know Mike has an opening where you can basically link into him. He's got some great trading tools. Um, so even when it's
For sure.
hard, is what sets successful traders apart. So, Mike, what do you think about this, mindset? Just what's some of your thoughts on mindset with today's trading myths?
I think that, well, well, when it comes to any of this noise-based decision making, that I almost like to take a breath, take a step away from the computer, and if I need to clear my head, go for a walk,
Mm,
and then come back, and then not even go near the computer yet. Just review what my rules say.
yeah, yeah,
Review the rules, review the plans, and then now that I'm in a better state, a better emotional state, uh, um, then I'm able to come back and make better decisions. If I'm trying to make decisions from a place where I'm feeling, uh, say, emotionally or mentally fatigued, that
yeah,
never ends up well.
yeah, yeah, without a doubt. And it's also, I think, the I know sometimes when I first began trading, I would feel like, and this would infect my thoughts. I would feel like, well, I've got to be doing something. I mean, because we're kind of brought up to that. You need to be productive. You have to be constantly doing something, 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 something. And so one of the things that would happen is I would be, when I would check my watch list on a daily basis, looking for something to trade. If there was, I would rather than just rapidly spinning, 5 seconds on every chart, go down through them, bam, 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 and be done in 15 minutes. I would go back and relook at them and go back and relook at them. And believe it or not, my mind would fool me into seeing triggers that weren't there, which led
Oh,
to a
sure.
lot of bad trading mistakes.
And you know what would also fool me in a similar way would be like, I don't know about you, but I draw all over my charts.
Okay. Yeah.
I like to have a lot of annotations, and I'll put on different specialty indicators. Like I'll do an anchored VWAP over here, and I'll draw the Fibonacci's, and I'll have all that stuff all over the chart.
Yeah.
And if I don't hide all that, then I'll get anchored into what I was thinking a couple of days ago, a couple of weeks ago, rather than seeing it fresh.
Yeah.
So
Yeah.
what I'll do is I'll hide all of the indicators, I'll hide all of the annotations and go through the chart that way. So that way I'm not having any kind of an anchoring bias.
Exactly. Exactly. And so, anyway, so one of the things that we wanted to share with everybody, and I wasn't going to let this escape us, is I want to share a, momentum indicator that is little known by very many people, but I've been using it for years, and I thank my buddies down in Texas for turning me on to this. And what it is the let me see if I can click this up. There we go. And if it's called I call it the modified TSI. TSI stands for True Strength Index. And what it is basically very uncanny on showing market shifts and momentum shifts. What I want to highlight is a couple of differences between the standard, which comes out with if it comes out of the box or out of the your indicator section of the Thinkorswim platform, was set at 25, 18, and 8. And that's this
Mhm.
lower section down here. And as you can see, it does a pretty good job at the absolute bottoming. No, that bottom there.
Okay.
However, and you can see that, and this is a weekly chart. When it bottoms and it starts to take back off, that's usually a pretty good place to trade. This is on Futu, Futu, and don't be fooled because these little moves. Come here. There we go. These little moves here are that little move right there was 145%, guys. So don't be
Whoa.
fooled by the skinniness of the of the chart. That will blow it up a little bit. What I did, though, after I was turned on to this indicator, I went to doing my research and I said, wait a second, this should basically be able to give us a better indication of um, uh, if I modified the time involved. And I came up with 883 because I used the 8-day moving average. And this turned out to be when it gets down into these lows, notice what's happening is when it gets on down to its low and crosses back up, it's typically ahead of, and it's when my signal is just starting to happen, but it's ahead of what the standard 25, 13, 8 TSI would do. Similar thing, you can go over here. That this crossed here, the cross here wasn't over until several weeks later, and also with the 883 TSI, it gave you a really good indication of when you should either be exiting and or taking profits. When it was up in the upper reversal zone and very overbought, that was when to get out. The other thing I love about this indicator is that it shows you, let me get rid of the drawings. It shows you the aspect of you can draw patterns with it. And so prices went up, hit a new high. However, negative divergence on my momentum. So the momentum shift had been shifted to down. The other way I use this indicator is when my momentum has shifted to down. It may get a bounce, but as long as it's heading down, I want to not take long trades. And so, again, if you want to know more information about the TSI indicator, I think I put a couple of I have a couple of videos over on my YouTube channel that talk about it. But Mike, I love this particular indicator, and as you can see, it does a darn good job of at least providing some early warning type signals that stand by, we're getting ready to bounce. And I find it works really well when it's closer to the lower reversal down here, the negative 42, for providing trading opportunities. So any question? So what do you think, Mike?
That seems like a great indicator, one that I'd want to try to test out too. I'm going to see if they have that over on Trading View, and if they have it, maybe even on Deep View. I've started to use Deep View recently.
And yes, they do have it on TradingView. Some of the guys have set up on TradeView. And so yeah, they do have it on TradeView. And so let's see. So what stocks are you kind of looking at right now, Mike? Looking into the as we prepare to get ready for the election.
Well, not a whole lot.
Okay.
Yeah, so right now I'm only holding on to Reddit.
Okay.
Reddit is one that I've been in, like I mentioned earlier. From where did I get into this? On October 3rd, and held through earnings, and then still sitting well with a portion of it. That's the only one. The other trades that I've had on, I've sold based on danger signals that have come up. That's included PLTR. Got out of that one. I think it was on Wednesday or Thursday of last week.
Okay.
Duolingo, similar. APP, similar. That one was sold the last bit of that one last week, and it's I sell when my system tells me to sell. Somebody else might look at these and be like, "There's absolutely nothing wrong with any of them," and
Yeah.
that's great. Follow your system, follow your rules.
Exactly. I know that PLTR has earnings. I think it's today, so that should be something to provide an interesting shakeup. And I'm going to throw up. Now I'm going to throw out here a couple of entities from a leverage ETF perspective that if you may be interested in, and one is LABU. This is the biotech 3-time leverage ETF. You can see it's breaking up of this lower trend line. We closed back above the 8 and all the other moving averages. So if it goes on up just even to this downtrend line, how what kind of a move would that be for it? And from where it's at right now, that would be another 7-8% back up to those highs. That would be even higher. And with our premium members, what we did is we entered down here today about 124. And so we're expecting, nice little 17 to 20% move. The other one to keep LABU could benefit from the election. Another one that could benefit from the election is XOP, which is the oil exploration straight ETF. And what goes along with that is gush, especially if President Trump is reelected. The oil exploration, oil drillers could benefit dramatically. And if this one does take off and run back up to the 42 level, this could be I'll just give you a quick number, or even if it only runs halfway, but back up to the 42, it's about a 58% move. And this has been in a pretty significant downtrend for almost half the year. So those are a couple to keep your eye on. The other one is if you like the leverage index ETFs, I was liking, I'm still liking right now. I'm getting a really nice go signal on TNA, breaking to the upside. TNA, the small caps could benefit dramatically if with a Trump election, if he wins the election. So, okay. So, hey, next time, Mike, what we'll do is when I'd really love to see your charts also. Just we can throw those up there if that's cool with you.
Oh yeah, absolutely.
So, okay,
Yeah, by
everybody.
next
Well,
week, hopefully we'll have some answers with the election, and we'll have some more stock setting up on my end. But for right now, I think that it would be a little boring to look at my charts because not a whole lot on the watch list.
Well, I happened to be in FUTU this morning, or we got into FUTU about a week ago, and it broke out today. We were in ADMA last week. Also, it broke out and ran up 20%, and so we, got out of that position. So, um, so
Nice.
Mike, we have some really great guests coming up in the near future, and I know Kathy Donnelly. Um, John Pocorobo, and you've got a couple also.
Yeah, yeah. We've got Andrew O'Connell coming up. I believe he's coming up on looking at the calendar over there. The want to say the 18th. He's coming up, and Alan Edward. I'm in talks with
Okay, cool. So Alan Edwards is
trading psychology.
uh, excellent. So yeah, Kathy Donnelly is an IBD meetup leader in Denver, Colorado. She did a wonderful presentation on also trading mindset, and so I thought that would be a really good mix coming up. So, okay, everybody, if you found today's myth busting session valuable, check out the next videos or go back and look at some of our past episodes, and we'll continue to deep dive into strategies. And if there's anything you would like us to deep dive on as far as a myth of the market, please drop us a note, leave a comment on Spotify and or the YouTube channels. And so, Mike, any last and finals?
Yeah, get out there, rock the vote.
Yeah, get out there and vote. You know, I agree with that wholeheartedly. So, hey, everybody, aloha and God bless. We will see you next. Oh, and remember to send Mike a DM because today's his birthday. He's a young
Ah,
fella. And so, happy birthday, Mike.
thank you
Sound
very
like
much, Dennis. Thank you,
so.
everybody.
Anyway, God bless and aloha.
Aloha.
And I can't.